Chenge, let's start with just an overall view of the market. It's a while since we spoke to you. So improved performance broadly?
Yes, improved performance overall. We saw the market close at a negative last year, but we've seen a great improvement in terms of the index performance. It's up year to date about 4.31. And this has been largely attributed to, obviously, the price increase in counters such as Standard Chartered Bank, which obviously constitutes a large percentage of the overall index. So obviously, we've seen that the price in Standard Chartered Bank has gone up about 18.75, which was last year it was down about 40%. So obviously, this is obviously impacting the index in a positive way. And apart from this, obviously, beginning of the year for us on the Zambian market means a lot of companies will be releasing their results for the year end 2012. So these should be coming through by March. So there's a lot of buy pressure on the market, obviously, which has been caused by shareholder anticipation of the year-end results. And obviously, they're anticipating that a lot of dividends will be declared in this period.
We were talking to one of your colleagues in Kenya, and he was saying how important dividends are to Kenyan investors. They're looking less at the long term. They're looking at short-term gains from shares. They want those dividends, and if dividends are not paid or increased, they can punish a share quite severely. Is that the same in Zambia?
Yes, that's very evident on the Zambian market as well. You see that most of the small shareholders are driven by the dividend. So obviously you see a lot of activity when there's a dividend that's been declared. So there's a lot of rush just to get into the market before the record date for certain companies. And also you notice that certain counters that are usually declare dividends, you find there's a lot more activity in those securities. For example, CEC usually, not usually, always declare a dividend, and therefore you see a rush into that specific company.
Looking at the inflationary expectations for the economy and growth expectations, GDP in Zambia from 2005 to close on 2012, 6% per year. So in terms of the exchange being exposed on the one hand to an economy that's still growing well, and on the other hand, are there issues around inflation?
Well, the inflation figure for February should be expected to come out about next week, Thursday. But we saw the January inflation figure drop down a little bit by about 0.3. So it closed at 7%. And we don't expect this to really change drastically. In January, we saw a bit of food price pressure. Obviously, this was just caused because, or this was just largely due to the millers trying to increase their prices in the milling mill. But obviously, this has now been taken care of, so we shouldn't really see any drastic changes in the inflation rate. So it should stay just around 7.